Every single day, McDonald's serves roughly 69 million people worldwide. That is more than the entire population of France, ordering millions of burgers and fries at lightning speed. In 2024, that constant global turnover generated $25.9 billion in corporate revenue. But tracing exactly how those dollars end up in the company's bank account reveals a surprisingly complex machine. The standard public assumption is straightforward. A customer pays a few dollars for a Big Mac, the company subtracts the cost and pockets the difference. Running a restaurant is notoriously expensive. Between sourcing raw ingredients, paying crew wages, and keeping the lights on, daily operating expenses consume the vast majority of the cash coming through the register. For the locations that McDonald's actually operates itself, after all those bills are paid, the company keeps about 15 cents of every dollar as operating profit. A 15% margin on low-cost fast food is mathematically insufficient to build a global financial juggernaut with hundreds of billions in assets. There is a completely different engine driving their wealth. Of the roughly 43,000 McDonald's locations across the globe, the corporate entity only operates about 5% of them. Independent franchisees run the other 95%. In a typical fast food franchise, the corporate parent takes an asset-light approach. They license out their brand name and their recipes, and in exchange, they collect a royalty fee based on a percentage of the franchisee's sales. In the 1950s, the company's first chief financial officer, Harry Sonnenborn, realized that licensing the brand would never generate serious capital. He convinced founder Ray Kroc that building true wealth required owning the physical dirt rather than just selling the menu. Under this model, the corporate entity buys the land or secures a master lease and builds the physical restaurant. They then hand the keys to a franchisee, acting as their direct landlord. The franchisee pays a monthly base rent, plus a percentage of their gross sales. McDonald's transitioned from a simple food licensor into a commercial property owner. Franchisees pay for both the right to use the Golden Arches and the physical building they operate in. This chart breaks down McDonald's $25.9 billion in total revenue for 2024, showing exactly how this strategy pays off. If we split the total, we see that about $9.8 billion came directly from the front of house, the sales at those few stores that the corporate office still runs itself. The heavy operating costs for food, labor, and maintenance on those locations drain away over $8 billion of that total. That leaves a final operating profit of roughly $1.45 billion, illustrating that 15% margin. Now we look at the remaining $15.7 billion. This is the back-of-house income, collected entirely from franchise rent and royalty fees. McDonald's owns about 56% of the land and 80% of the buildings globally. Because the franchisees cover their own labor and food costs, this $15.7 billion segment requires minimal corporate overhead outside of standard property depreciation. After filtering out those minor property expenses, this segment produces $13.2 billion in operating profit. That is an 84% profit margin. Comparing the two totals makes the reality of the business clear. The massive volume of burgers and fries sold every day exists primarily to ensure franchisees can pay their rent, which corporate collects at an 84% margin. This map illustrates the global scale of that strategy. Across more than 100 countries, the combined value of McDonald's land and buildings is estimated at $120 billion. Because franchise lease agreements require minimum base rent payments, corporate cash flow remains steady even if local restaurant sales experience a temporary dip during an economic downturn. Owning the physical location also provides ultimate leverage. If a franchisee fails to maintain brand standards or resists mandated store upgrades, the corporate office has the power to terminate their lease and find a new tenant for their building. Consumer tastes fluctuate, but holding the deeds to tens of thousands of prime commercial real estate parcels ensures long-term financial stability without relying solely on a consumer product. McDonald's operates a $120 billion commercial property trust. They just happen to use French fries to fund their acquisitions. To see the full breakdown of these numbers, you can download our complete financial presentation deck and data infographic. Click the link in the description to join our Patreon and get access today.